Hi, everyone. This is Arry Yu, Chair of the Cascadia Blockchain Council, and also your host on the Windshield Time podcast, YouTube show, and also the Blockchain Underground Meetup series. This week, we had a great AMA from my friend, Jerry David Chan at Digitsu on Twitter. He's an OG Bitcoiner that's been around for a long time in this industry, bought his first Bitcoin at $12. Crazy. He's actually in Japan, and so he was up at 4 a.m. Japan time to be on this AMA with us. So very, very thankful. He answered all sorts of questions. We talked about his background on Wall Street with Goldman and JP Morgan. He went all in on Bitcoin in terms of the industry and work and everything in 2014. We talk about tokenization solutions. We talk about his experience with SBI, the Bitcoin Association, helping people figure out whether to pay attention to a particular cryptocurrency or ignore it. He did call a lot of crypto snake oil, so beware, everybody. We talked about definitions of Bitcoin maximalism. It was different back then than it is today, and second generation cryptos. So lots of stuff. Learned so much in this particular episode. I hope you'll enjoy it as much as I did. And don't forget, every Friday at 12 p.m. PST, we host a community meetup or an AMA with a special guest. Speaking of special guests, next week we have the tax team from TaxBit joining us October 1st for a practical crypto tax AMA. So you don't want to miss this, 12 p.m. next Friday, October 1st, 12 p.m. PST. You can join us on any one of these meetups on the Blockchain Underground under Meetup. And don't forget to rate, review, subscribe, and share if you like these shows. That will really help me and give me feedback. And I hope you'll join us. Okay, all right. See you soon, and together we rise. Bye. All right. We're going to let the, people trickle in as they join the call. But today we have Jerry David Chan from Japan joining us at 4 a.m. his time. So super big thanks to Jerry for waking up at an ungodly hour and joining us for this session. Hi, Jerry.
Hi, Arry. Glad to be here. Thanks very much for having me.
You're welcome. So for most folks that are unfamiliar with you and the work that you've been doing over the many years in the space, can you give us like a long form background on your bio? How did you get into Bitcoin? What are you doing now? Stuff like that, all that.
Sure. Long form. Okay, please stop me if I go more than like 5 minutes. I don't think anybody's ever given me the liberty to go do long form of this, because I might have the tendency to ramble on. But do stop me. So I'm my background is engineering, and I worked at financial institutions. I think in a technical base job. For how long now? I think it was like 11 years at Goldman Sachs and 3 at JP Morgan before. Well, not before, but on the tail end of those, I kind of found out about Bitcoin. So I think it was like 2000 beginning 2012. I think I heard of Bitcoin, and it was probably sometime that year as well. I faithfully bought some Bitcoin through Mt. Gox.
Wow.
And yeah, I got into it by just trading it. And it was kind of funny because I worked on the trading desks of the foreign exchange trading desk with the FX traders. And so they were always looking over on my desk and like asking me whether or not I was also trading currencies. And I was like, yeah, man, digital currencies. And they're like, wow, that's cool. Are you allowed to do that? I was like, there's no law against it. Well, because generally you can't really trade and do anything on your own book when you're working on a trading desk. So that was
you were in Japan during this time while you were at JP and Goldman. Okay,
that's right. So the Tokyo office. So I guess I got into it from trading, and then I probably about 2000 and well, no, actually, I guess that would be extending the story. So I sort of got into it since 2012, but I didn't really get into the technicals. Like I honestly didn't really look into anything more than just trading it until probably 2014, 15. Groggy exactly when. Probably 2015 to be more precise, but because I left JP Morgan in 2014 to do, just exclusively Bitcoin stuff. At the time, I wanted to build. Yeah, I wanted to actually build some. What was the first thing? Well, first we wanted to build an exchange because I thought that Mt. Gox was absolutely terrible, and we could definitely do better than that, considering that was like what I did. So I rounded up a couple of friends from JP, and we left, and we wanted to build an exchange, and we actually got the matching engine and most of all the back end done. And then Mt. Gox went kapoof. and then saying Bitcoin was like a bad word. And so we couldn't really get any funding or any interest after that. So it was like poor timing. Because like literally, I think 4 months or 5 months after I left. Well, let's just check our dates here. I think Mt. Gox went kapoof in like beginning of 2015, or was it 14?
I think it was 14. Yeah.
14. So yeah, it was like a couple months after I left, and like they went bankrupt, and then it really was like, okay, well, we're not going to be able to get any funding anymore. Who wants another exchange to sell crypto? Nobody, after losing $800 million. So that was so it kind of pivoted to building some tokenization solutions at the time, using the technology at the time was like colored coins and stuff on Bitcoin, but that didn't go very far, once again because of the sentiment in Japan completely changed from curiosity interest to like nuclear toxic waste, until about 2017, when, so good 2 years later, when it got a little bit better, and I was called into head up the blockchain department. Do you want me to elaborate on that? Or
yeah, keep continuing.
Continue until today. Okay. All right. I got my free license too. So 2017, yeah. So I started up the blockchain development department at SBI, and we grew out. Well, the primary reason was that they wanted to build an exchange. So 2 years later, they so I put together a team. We actually from 2017 to 2019, I was at SBI, and so I did a couple stuff there. I started off the SBI VC, which is the SBI Virtual Currencies group, which was the exchange. So that was mostly just putting the team together, and I was the COO of that. And then I also helped put together the SBI Crypto Mining Group, which was the actually they're still running, they're still doing quite well. It was their whole mining endeavor. SBI at the time was I guess there still are, they're quite progressive in that they were trying to test out and do a lot, get involved in a lot of the technologies, blockchain technologies. I mean, they invested in whole sorts of stuff. They Ripple, they invested in the Bitcoin stuff that we're doing. They looked into Corda. Actually, not looked into. They invested quite a bit into Corda, and so they got the whole sort of portfolio of all the technologies. And so from there, I did a brief stint at Bitcoin Association, but that's like less than half a year. And then after that, that was more like just doing sort of talks and sort of enterprise development. And from there, I was called in to head up, be the transitional CEO of TAL blockchain, TAL Distributed Information. And they were a company that was doing just mining. And they had some mining assets in Asia, and they needed to transition over to a sustainable business model, one that would last well, longer than the next 5 years, or I guess put it like longer than as long as the wait, that's not a grammatically sound sentence. They needed a business model that wasn't going to that was still survive if Bitcoin price didn't continue doubling, right? A lot of the bit mining companies currently still have that's like their sole dependency, right? They are effectively a business model that lives eyes by the fact that Bitcoin price will keep on going up. If it doesn't keep on going up, then their business model ceases to produce money anymore. And so far they've been okay because it has been, but there are folks. Anyway, Tao wanted to decouple somewhat from that sole business model, and so we transitioned to a dual, revenue business model. One where half of the business would be mining revenue, and the other half would be transaction processing revenue. So that was spent a year and a half, I think, there. And so we succeeded in switching over the business model. And that was my last employment job. So now I'm just, doing my freelance consulting and stealth projects, blockchain, projects written on Bitcoin, which have to do with some more of the kind of the stuff that was spoken about back in 2014, 13, 14, 15, but I haven't really seen any real good successful use cases of, like machine-to-machine payments and IoT stuff, and using really the Bitcoin network as something more of a technology platform akin to the internet. So there's a lot of interesting things that can be done there, which I think some folks are starting to catch on to slowly now. So that brings it up to the present day.
Wow. So you're kind of like building your portfolio of passion projects now, it sounds like.
Yeah, I've gone through the whole gamut: exchange, to tokenization platform, to machine payments and world computer kind of stuff.
Pretty crazy. I have a question, but we also have a question from the audience. So sure. Benjamin has a question saying, I'm pretty new to crypto, so he wants to know how you distinguish between crypto that has long-term value versus more near-term hype. Like, what sort of characteristics are you looking for?
If I I assume from the perspective of investment, right? Like price, activity, price action. What I normally do is I assume hype first. Like in this industry, you're not going to do yourself wrong by assuming that it is hype. First off, never assume that it has any long-term value. Basically, the onus is on the project to prove that it has long-term value, and that shouldn't be the assumption. It's kind of like the legal system where you assume innocent until proven guilty. Well, in crypto, assume guilty until proven innocent. Just because statistically, most of them will be guilty. And the reason is because crypto is that funny industry, which I think after about almost 10 years now, I've seen that. I mean, it works because there's a monetary element to it, and that monetary element is that it allows people to raise funds quickly. Right. It is a form of money. Right. And so even if it's not a widely used form of money necessarily, it is a form of money. And therefore there's the attraction that you can make, generate funding very quickly, and also generate interesting new revenue streams from your projects, from your software, from your platforms and stuff like that. But it also makes it very easy for, scam projects. I mean, as long as somebody's saying something which you don't understand because they're using a lot of technobabble words and it sounds really convincing, well, then they can sucker you out of your money. Just like just like in the turn of the century, people were selling snake oil, and because they sounded like they had shaman skills, or I don't know, they came from like Chinese medicine something, and it convinced people that snake oil would cure all their ails. So it's easy to sort of like make money, but it also means it's easy to be a sucker. So assume that it's no long-term value, and then what I would normally look at for a project to determine if it has long-term value is, firstly, always ask the most important question: why do you have a coin? Why do you have a token? Right. So it kind of depends on whether this project is more of a token because it's token first, technology second, and then or versus technology first, token second. So I would generally look at the ones which are technology first, token second, if I'm looking for long-term value, because long-term value comes from the technology, not from the token, right? Long-term value isn't a project whose purpose is only money. Now, I know there will be a lot of folks who might disagree with me on that. So I will acknowledge that, there's a whole army of, dark army of people who will say, the Bitcoin is a great example, right? It's a store of value. That's all it needs to be good at. I don't disagree with them. I may be wrong. It's lasted 10 years, but I think, I don't think it'll last another 10 as just the store of value. If that's what it's going to be, it could last longer if it's other stuff, does other things besides store value. So my opinion is that it has to have some sort of underlying technological aspect, or maybe it doesn't. Well, yeah, generally technological. I will say it has to be kind of technological because I can't really see it being anything else. But what that aspect is it fills the economic need for it to have like an intrinsic value, right? Because I believe commodity money, which is what Bitcoin is, has to have an intrinsic value, right? Gold has an intrinsic value. A lot of people will gloss that over, but those people generally don't have an economic background, or have any sort of background in financial, industry. They will say like, well, what's the difference between digital gold and real gold? Well, a hell of a lot, actually. A hell of a lot. Well, yes, the digital form is easier to transfer around, but gold has a 5,000 year, or probably even longer. It has an intrinsic value because it's a pretty metal, simply put. I mean, it's like glass beads, right? It has that sort of visceral, physical form. Digital gold will never have that, and so you can't argue that it doesn't have a form. If it doesn't have that form, and if the intrinsic value of physical gold is its goldiness, or the fact that I can have some bling and wear it, that's what it is. And so that's how gold gets its intrinsic value. I believe Bitcoin as a commodity money can have intrinsic value. It just has to be a technological intrinsic value, some sort of utility. Anyhow, so utility first, token second, and then evaluate whether or not it really needs a token. If there's a real function for the token. And if those two things are both checks, then I would say there's a good chance there's a long-term value in that project or coin. Not saying that, there might be some long-term value in the other ones. It's just probably not.
So then, Jerry, hopefully that answers your question, Benjamin. Jerry, I'm hearing a little bit of the, I guess you're not a Bitcoin maximalist. So I definitely can hear that in your words. But back in 2013, 14, when you left JP Morgan, you dropped it all for Bitcoin. And it was at a bad time where there's Mt. Gox and Silk Road and everyone was so very fearful of this industry, but you jumped all in. Why? What was pulling you into the industry? And then I'll call on Lemmy next for the question.
Sure. I think the term Bitcoin maximalist is just a term that was invented in the last 2 years or anything. So I don't think it's fair to say I am, or well, at current present, yes. Okay, I won't dawdle on a question. I am not a Bitcoin maximalist as that term is defined today. Now, if you asked me in 2014 whether I'm a Bitcoin maximalist, keeping in mind that term didn't exist back then or didn't have the meaning it does today, I probably would have said yes. But because Bitcoin was the only thing. So I guess by de facto, I was maximal enough to leave my my totally well-paying job in Wall Street to pursue this. So why did I do that? Because I had two main reasons I got interested into Bitcoin.
Okay.
One, which was from the monetary aspect, it was a curiosity. But to be fair, I only got interested in Bitcoin after I kind of believed in its the economic solution that it presented, not the technological one.
What do you mean?
So when I first heard about Bitcoin, I kind of just like shrugged it off. I literally, I think I just laughed at it. I just said like, oh, those idiotic West Coast Silicon Valley folks trying to invent money again. Ha ha ha. Right. Because that's what everybody who works in Wall Street and, you're like, oh, look, they're trying to do some crazy stuff. It's going to be another Amazon.com or something. Right. Amazon.com is trying to invent money. Well, I mean, obviously, that's kind of like the prejudices you immediately just think of if like, oh, there's a new electronic money. Because there's been so many times in the past, I remember hearing they were inventing electronic money, right? I heard about Liberty Dollar. I heard about e-gold. E-gold was pretty big around the time Google went public, right? In the turn of the century in .com.
Right.
And all that kind of stuff. So it just seemed to me like, oh, those Silicon Valley folks, ha ha ha, right? I know remember Google did like a web IPO, like lol, right? Who does that these days anymore, right? Nobody. There's a reason for that because it went horribly. I feel sorry for those people. Well, I mean, in the long run, obviously, they still made a hell of a lot of money because Google, but still, as far as IPOs went, I mean, they probably would have been a lot happier if they went the traditional route. But anyhow, or maybe Google was the one that worked and all the other people who tried to web IPO afterwards, like where everybody lost all their money. But so it just sounded like another silly idea. And it wasn't really until another friend said like, dude, I just bought some Bitcoin. I think it's really cool. And I was like, okay, this guy was telling me this. I kind of have respect for this guy. He's one of the, the smarter quantity guys at the office. So I was like, he can't be like a dummy. So, all right, I'll look into this. And I read the white paper. And I think one of the reasons why I actually sat down to read it was because I was only like 9 pages or something like that. I was like, okay, fine. I can definitely do that. All right, I'll give it a whirl. And I'm sure I'm going to find something idiotic in there to make me think like, okay, there's the problem. All right. But I didn't. I read it and I was expecting the author to say something like, and we need this to, take down Wall Street or blah, 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 or like we need money because of da, 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 da. And it's like, no, they didn't really say anything about why they needed to invent a new money, which was like, oh, that's a positive point. That's an interesting check mark. It's not like some crazy revolutionary, thing. Basically, I think besides some mention that this project, it alleviates the need for trust intermediaries, or at least the need for trust intermediaries to be like the honeypot of holding all your information, private information. There wasn't much mention at all else about like how it affects, the regular world. And I thought, okay, that sounds like a plausible, good, positive reason, even from a guy from Wall Street. Okay, yeah, that's true. Because I think at the time, around the time, I could be wrong, but there was a big hack at JP Morgan Chase, like Chase lost they got lost access to a lot of their accounts. Not lost access, sorry. Some guys broke into Chase and they got like list of accounts and names, like the classic thing, right? Like Walgreens, Walmart had something the same.
Yeah.
Anyway, but generally large companies aren't that great. I mean, sometimes at protecting all their information. So somehow, there's these leaks, and that was exactly what the white paper said it would solve. And I was like, okay, that's interesting, but how are you going to do this? And then I remember at the end, the last part of the white paper, which really which really, really kind of sucked me in, was like, he didn't prove it. He didn't say that this is mathematically, it's just going to work, because I was thinking like, come on, guys. I mean, like people have been doing like shared multi-user databases, synchronized databases for like, last couple of decades. It's not new, right? We have like things like Cassandra and Paxos and Raft and consensus algorithms. Why do we need this one, right? And I remember the solution was very unique. Like the solution was like, oh, there's no solution. It's just that people will lose money if they act dishonestly, and they'll make more money, or they make more coins. So I should say, like, one, the reward is in the coin itself. Okay, interesting. One of those catch-22s is like the coin is worthless, but I mean, if it becomes worth something, then now it has a value of why you want to act honestly. And I was like, oh, that's kind of interesting. I was like, wow, damn. I mean, it's almost like now I have to see whether this experiment will work, right? Because if the coin gets worth something, then the actors of the nodes in the network will have an economic incentive to act honestly as opposed to dishonestly. But it doesn't guarantee that they will always act honestly. It just means that the honest ones will make more money than the dishonest ones. And therefore, the only thing that you're relying on is people like money.
Yeah.
Okay, agreed. Yeah. People are greedy. Yes, agreed. So maybe this might work.
Yeah. Right? Yeah, so the game theory is like really embedded in with incentives, which makes Bitcoin magical. But also, like, I feel like the original code of Bitcoin when it was deployed included that like headline, Chancellor on the brink of bank bailouts, and that was a direct commentary against the 2008 global financial crisis. I mean, like when you're looking at this in 2012, 13, 14, it was literally right after the global financial crisis. Yes. So was that on your mind at all?
Yeah, people were looking kind of like, I guess, inclined to believe in a solution to that. I mean, I lived through the financial crisis and right in the middle of it, saw all the damage it did, saw how, although I didn't really see Bitcoin though as necessarily, okay, it was definitely financial crisis was bad, but I didn't totally see it as like a direct solution for that, because I didn't see the link between central bank money creation and financial crisis, because I mean, financial crisis was caused by, lax regulations around subprime mortgages and perverse incentives that certain companies, like the whole CDO and CDOs came first, or mortgage. I think it's kind of another chicken egg. I think the mortgage-backed securities came first.
Yes, but then there's the government response to it. So then they bailed the banks out, and then we've socialized the debt of these large banks, and we've allowed them to privatize their profits. And there it was the problem. It became very glaringly loud for everyone to see.
Okay, and I agree with you there. Yes. So two things there. Yeah. I'll agree with your second one. The privatization of banks is, I think, I agree with. But the first, I will say that although the government did use all taxpayers' dollars to bail them out, if the bailout didn't happen, I believe that we would be in a lot worse place. A lot worse. That's my opinion. Because now whether or not the government had to use I don't know how they would have solved it otherwise. But if you had a systematic collapse of everything, like if it did, with the dominoes were allowed to fall, I think that we would be in a much worse place. We probably would have been still suffering. It's an economic downturn and joblessness for like another extra 5 years or more, because so many things are interconnected. But maybe at the time we also realized the problem is that how did it get all this internet? How did it get this way? But you can't just say like, okay, let's just cut it out like chemotherapy, or more like, I guess, let's just saw off the limb, because I think but that's a different discussion. There's this once insurance companies start going down, then that's where a lot of people's monies and pensions and it would have been worse. Now whether we're still paying it, but we're just paying it in the long term, right? It's just like the government just decided, like, look, instead of making all of you lose all your money now, and so you can just jump off a bridge and commit suicide now, if you're, a middle-class family, or we'll make you and your children pay for it for the next 30 years, 50 years. I know it's a really bad choice to make. I know. And I'm not saying that either of those solutions was good, but I do believe that the outcome was, hopefully, maybe in the next 30 or 50 years, we can figure out a way to pay the debt back. But anyway, the second thing I do agree with, privatization of banks, which effectively means, I guess the public, more like the deprivatization of banks, right? Like the government owning the banks, right?
No, the government bailed out. So all of their debt and all of their troubles, instead of letting them fall, we use taxpayer money. We socialize their losses, and then we allow them to keep their profits. So those in the banks, the executives, the investors, still made out like bandits, basically, when with their profits.
Lehman did it. Lehman, don't forget, they let two very, very large institutions die, right? They let Bear Stearns die and they let Lehman die. And I think they I almost give the credit to the government. They were almost going to let it just, hey, let it work itself out, right? Let's just do the whole Keynesian thing. They let Bear Stearns die to say, like, yeah, too bad on you. You were stupid, right? Okay, you blew up. And I think if that was all that would happen, that would have been fine. But the next domino to fall when Lehman went, I was in Goldman at the time, so I know that if Lehman fell, Goldman and JP would have been next. Morgan Stanley definitely, and Deutsche right after that. And if once those two fall, Goldman's gonna be done. And like really, I think everybody's programmed for the like the last 20 years, people programmed to hate banks. But seriously, you can't just cut out that, saw it off and just hope and just bandage it up, because if you took away the financial institutions, just like cold turkey, I don't think the economy would survive. Now, I'm not saying that all they're doing is good. So you should look at like some stricter financial regulations to disallow them from getting entangled so much into the economy. But once you have a cancer that's all over your body, you can't just like cut it out, because it means cutting out your whole body. Because of all, like, I've seen the bad stuff. Well, not really bad stuff, but the Goldman did the whole Greek bond thing. But they do a whole lot of good stuff too. You just hear about the bad stuff. Anyhow, I'm here to justify what they did pre-financial crisis. It's almost like if you set the rules too liberally, then of course they're going to basically, exploit the rules. If you allow loopholes to happen, then they will exploit it. If you allow their lobbyists to push Congress to relax, like what happened to Glass-Steagall, right? I blame the presidents that were voted in that allowed them to degrade Glass-Steagall, and then all of a sudden investment banks start like, hey, on the banking side, what are you doing? Oh, well, I'm doing this on the security side. Hey, why don't we collaborate? I mean, that we saw what happened when they did that last time. It was the Great Depression, right? So, all the rules that we put in after the Great Depression got slowly eroded by lax politicians, or politicians who allowed it to happen. And at the end of the day, you kind of have to blame people who are just, maybe we voted in wrong people. I don't know. But it happened over the course of decades. So it's slow, but it's kind of like cooking a frog, I guess. Anyhow,
let me cut in there, and let's change routes of the conversation. So let me grab Lemi's Lemiesc. You got a question you want to ask?
Yeah, no, I mean that was very interesting. I forgot what I was gonna say. Yeah. Oh, so it's kind of like way off what we were talking about, but it's kind of like a two-part question as well. One, with second generation cryptos like Ethereum, why should I still care about Bitcoin, which seems to have way less functionality than something like Ethereum. And if I should still care about it, what is the feasibility of ever having let's a layer 0 network that like bridges all these different protocols together?
Those are very good questions. I don't think you should ignore Ethereum. I don't know why I'm having problems saying it's 4:30 in the morning. Forgive me. I don't think you should ignore it. I think Ethereum does bring into the picture a different value proposition, right? So for that, it is useful. Back to when I spoke about commodity money has to have a intrinsic value. Well, Ethereum does bring an intrinsic value. Its whole, that whole smart contracting programming thing, which is I incidentally, that was exactly why I was interested in building on Bitcoin in the first place. I mean, back to the reasons why I left my cushy job to do it is because one, we started talking about the monetary aspect, but the second thing, which maybe I didn't highlight enough, was the fact that it was programmable money, right? And that's why I left. I mean, otherwise, why would I quit my job just to trade Bitcoin? I didn't quit my job to trade Bitcoin. I didn't quit my job to buy and hold Bitcoin because I would be stupid. I could do that while with my cushy job, right? I left my job because while working at Wall Street, you're not allowed to own anything that you do on the side, all right? It probably applies to most companies as well, like, I don't know, big companies, I think. So I wanted to build technology on this platform. I saw Bitcoin as, okay, if it works on the money side, it works, whether I'm doing anything or not. Because that's unless I'm doing the mining thing. And I at the time, I never got into the mining thing. But it will, I think, people building stuff on it will contribute to the value as well, right? So I kind of thought it had two things going for it. If you're going to drive a value to this thing, which was literally worth, when I got into it, about $12. I think that was when I bought Bitcoin, it was like $12. I should have bought a lot more at that price, but at the time, who knows, right? So I started building stuff on it, and so Ethereum. This is it's a very good question because it brings me to the time of when I started seeing the people who wanted to build stuff on it versus the people who wanted to push the monetary side started not agreeing on stuff. And, Vitalik was one of those guys who did also, like me, wanted to build stuff on it. So he was getting frustrated, and he started earlier than me, right? So I think he was started getting Bitcoin around 2011 or maybe 2010. I don't know exactly, but he was writing for Bitcoin magazine at the time earlier on when I was still just cushy in JP Morgan. And then when I caught up to the argument, the debates that he had with the core developers, right? I found myself, agreeing partially, for the most part, agreeing with his major ideas of why he wanted to do smart contract stuff. But I also didn't really agree with his technological implementation of Ethereum because of lack of appreciation of some of the economic side. But I will go into that if anybody wants to ask that later. But on the high level, general level of your question is you should pay attention to other projects like Ethereum, which do bring something different to the table. As long as if a project brings a different intrinsic value to the table, that's not being addressed, or perhaps not, you don't find it somewhere else, then there's potentially some long-term value there. I'm not saying that will be, but potentially, at least it has the potential. So yes. The second part of your question.
Well, but the opposite question is, okay, so you still you should care about these new cryptos, these second generation cryptos, but should you also still care about OG Bitcoin, like the grandpa of the
right?
Space?
For as long as people, okay, yes, but for a different reason. So I guess that sort of dovetails into your second question. Is there still some usefulness of this, like a layer 0, one system to connect it all? slightly different question, but yes, there is value in a system that could connect them all together. Do we have one today? No, we don't have any. No project is the connecting bridge. Maybe a project that would be. It doesn't need to be a new project, mind you. If an existing project could act as the bridge, it would probably do a lot better job than inventing a new blockchain just to connect blockchains. It's just like, that would be like just totally overkill. In fact, that was already tried. I think that's how Cardano started. I think that was what was pitched to me. It's like, it's a blockchain to be, we have a blockchain of blockchains. I was like, oh, great. It's one of those metas of metas. So, right, you should still care about it for different reasons. For instance, for the reasons why you should probably care about BTC still is because everybody else is. Like, literally, there's no reason besides the fact that other people are. If everybody ceased to, then you wouldn't have a reason to anymore as well. But it's sort of like another catch-22 thing, right? So a lot of things which self-bootstrap themselves are these kind of catch-22 situations. So I guess that's a separate question. So I'll leave that for a separate question. I'll just leave that as if people stopped caring about BTC, then you probably don't need to care about it either. But if people are caring about it, then you should, because it is that right now it's functioning as an entry point for investment into the space. It's serving that purpose. Is it uniquely good for that? Technologically, no, but it's uniquely good for that because everybody else feels that it has value there, and it is probably the most liquidly traded in all the exchanges you can access. So at present, I stress that at present, because the whole exchange landscape could change in a year. All right, that's the thing that's highly volatile right now. Like, people shouldn't get too cushy with exchanges. I mean, I was cushy with Mt. Gox, right? And so I'm telling you, from someone who's thought it was pretty solid, you shouldn't get too, even exchanges like Coinbase, ones which are actual companies, they're not established yet. They are not, even though a lot of them are a hell of a lot more established than Mt. Gox, mind you, yes, but they're not. I don't think any exchange has made it yet to the point where, you're like a Goldman, right? I mean, even Lehman Brothers will kaput. So if they get to the point where they're even qualified as like a Bear Stearns or something like that, I think I would be pretty okay with putting a lot of money into a crypto exchange. But until that happens, it's still tentative ground. So the exchange industry could still change. And if it does, anyhow, that could affect the popularity of Bitcoin. It could affect it.
Could I like piggyback off of what you said about the exchanges changing? But like, isn't that like kind of the pattern that we're moving towards? Is like, not even centralized exchanges, but just full on like decentralized exchanges happening on chain. So like, and then you don't have to trust those necessarily, right? Because they're not owned by a single entity, like owning your money. You still own your money, and then you just trade P2P.
Well, so that's true, but that's from the technical perspective, right? You will definitely lower your risk of the exchange going bankrupt, or more likely, when a crypto exchange goes bankrupt, they go bankrupt because somebody inside stole all your money. Right. That's literally what happens. So they will call bankruptcy, or they will say we were hacked, but you will never know the difference between we were hacked versus I just stole all your money and left. So I agree. Decentralized exchanges or smart contracts, stuff that will effectively allow you to exchange, does reduce that risk somewhat, but it does introduce a whole slew of other risks that you don't have with a centralized exchange. So you're not absolutely net necessarily better off. Maybe you are. We'll have to evaluate, because it's still very new. Decentralized exchanges, I know there's like Uniswap is one, and there's like another there's a couple of them, but let's be honest, it's still pretty new. And it's still the point where these decentralized exchanges are kind of like Mt. Gox in 2012. except a different model. And so some of the other risks that you take on when you use sort of smart contract exchanges, there's obviously some technical risks, bugs and that whatnot. There's hacking risks. If poorly written smart contracts, there's that one. And the other one, which I think most people don't consider, is there's legal risk. So if you're playing around with a couple $1,000s, like nobody's going to care. Right. I think a lot of times people have a false sense of security and saying like, look, I've been using it for 6 months. I've been totally fine. Well, how much has it been trading? Right. Oh, $5,000 or something like $10,000. You're nothing, right? You're nothing. Like SEC, nobody's going to give a shit about you. Right. If you look at the industry of the money laundering industry or the shadow banking industry in Asia, right? I mean, if you can clearly exploit loopholes and move any amount, probably less than $500,000, right, through casinos in Macau and stuff like that. Nobody cares, right? I mean, maybe $500,000 is a little lot. Definitely under 100K, probably nobody's going to care. So there are plenty traditional ways you can get around strict laws because you're not worth going after. Same thing as in this. I think if these sort of decentralized exchanges get to the point where there is a significant amount of money moving, not only that, it's provably illegal. So that's kind of where there's a little bit of I'm very interested to see how this pans out, because regulators won't move until they have a case, right? Have a clear case. And so it's a constant battle between coin mixers and anonymizers versus, and so we'll see how it all, if it works. I mean, it's pretty much a coin analysis companies versus the coin mixing, so maybe one side maybe it'll work, but you're kind of running a risk. But if you're not money laundering, then you're fine. But the trick is, how do you know you're not? See, that's kind of the thing. If I'm exchanging a lot of money, if I exchanged $100,000 with some anonymous people online, how do I know that's not dirty money coming from Russia or China? If I don't know who they are, I don't. So I could plead ignorance, but if all of a sudden if the FBI knocked on my door the next day and said excuse me, we noticed that do you own the keys to this account, because we've traced some dirty money back to this account, what I would say, I don't know, I just use Uniswap, right, or something like that. I may not get in trouble, but certainly maybe that money will be confiscated from me. So that's a possibility that I don't think a lot of people consider. And it's probably okay. Like I said, we'll see. But it is definitely changing the game. I'll give you that. And so that might change a lot of things. Yeah, but I think regulators are finally starting to, get a handle on it, and they move slow. So we're only going to see more and more regulators get more and more educated and start to crack down on the bad parts of the industry. And very much like the financial crisis, when they start cracking down, that's when we start to see how interconnected all of it is, right? Just like, hey, can we just let Bank of America go kaput, or can we let AIG go kaput? Well, most people would say, yeah, let them die, right? I mean, it's kind of like saying oh yeah, let BTC die, or because if you did, right, how much is connected through all of these contracts? We don't know, especially if a lot of these contracts, their whole point was being anonymous, right? So, the whole thing could be if you pull this thread, the whole thing could collapse. We would never know if everything was going through all these anonymized interconnections and, locked up funds here, crypto there. So there's a lot of there are a lot of variables. It could end up being another financial crisis, mortgage, prime, subprime mortgage crisis that starts somewhere in the crypto industry, but because everything's so interconnected, it could drag everything down. And that's the kind of the thing which I worry about, and I'm kind of expecting to happen, because the thing that's going to trigger it is some part of crypto gets pushed under regulatory scrutiny, and they get pressured to close something down, and that might cause ripple effects.
Dun dun dun.
Maybe. Well, tether.
All right. With a few minutes left, I notice you work more exclusively on Bitcoin Satoshi Vision, BSV. Do you see a difference between yourself as a Bitcoiner between BTC and BSV, or is everything just Bitcoin to you?
Well, they're separate projects now, so I'm not going to play the name game. And some people are like, oh, we're the original. Like, okay, whatever. It's like a separate project. It's like a split project. I spend most of my time on BSV because it's the one where you can still, one where you can now build stuff on, very much like for all the reasons why Ethereum needed to make their own blockchain. It's because the original core developers didn't listen to Vitalik, who wanted them to make some changes, right? I mean, I don't know how technical audience is, but since it's recorded, I'll say it for posterity. I mean, I think Vitalik wanted an increase in the operatorn size, which was like 40 bytes at the time. They said, no, we don't want to change that. And because he wanted to start doing token stuff, I think. And there was also some opcodes that are turned off, still off in BTC, turned off like around 2011-ish, depending on which opcode. But it effectively makes the whole dream of programmable money not possible. So if you do look far back, if you read the original Mastering Bitcoin by Antonopoulos, and there was a lot of talk of programmable money. Why is nobody talking about that anymore in BTC? And why is everybody talking about second layer stuff like Lightning? Well, the reason is because they turned it off, right? They switched it off because the people who were just pushing the monetary aspect of Bitcoin won. And so everybody else who wanted to build something, like Vitalik and myself and everybody, I honestly did try, even though they turned off all the opcode stuff, because I was using more of the colored coins. I wouldn't really say second layer. It's kind of like what Vitalik wanted, opportun bigger, so you can embed metadata into each transaction, so you can create tokens on top. So I worked in like layer 0.5, I guess, at the time. But BSV has all those things switched back on. So if you compare the technology, just looking at just the technology, BSV is the closest to like Bitcoin, as of 2009. Well, at least in terms of the protocol, the programming, the Bitcoin script, the internal language that Bitcoin has, Bitcoin script, which is pretty much useless now for doing anything except for payments and creating Lightning contracts. It has that original script back enabled, so it's somewhat more like Ethereum, although Ethereum is much easier to use because it's like JavaScript. So
I hear hints of romanticism and like idealism and the original.
No, that's not me. No. I mean, I'm repeating what some people will say. It's not because it's the original. It's because that you can actually program.
But then how viable is BSV? Because you were talking just a little bit earlier about how, one of the strengths of Bitcoin is really like everyone's using it, especially today. So the network effect is one of the most powerful aspects of Bitcoin. Bitcoin SV, BSV, has a much smaller footprint. I mean, there is no network effect really. It's very, very centralized. So like, why would you continue to?
Well, I wouldn't say it's centralized, but because anyway, but I wouldn't say it's centralized because the whole centralized versus decentralized is a totally misused term. But it has to have a lot less of a network effect. But for people who just want to build stuff, that kind of doesn't matter. I mean, it's obvious it doesn't matter because it's the same as someone who builds a new blockchain, right? If you come up with new coin, right, tomorrow, new coin has zero network effect. But of course, maybe this new coin project, it's doing something new, like, I don't know, proof of importance or proof of burn, or, some some sort of interesting technological aspect, which is new. It's bringing something new, right?
Mm-hmm.
So clearly you don't care about the value of the coin at that point, because if people start using it for that thing, then the value of the coin will appreciate. So while Bitcoin is still used as the de facto crypto money now, I'm not disputing that. You should use BTC for the de facto money now. It's useful for that. You don't need to use BSV for that. You can use BSV just as the coin you need to use these things that which people are building on it. It could be a utility coin, like very much like Ethereum is, right? I mean, Ethereum is not professing their money. They're a utility coin. You need to buy Ether if you want to use Uniswap. Right. So the same thing for the things that are being built in BSV, because you can build these interesting things. If people want to use these interesting things, like, Bitcoin phone is one. I think Crypto Fights is now on. So that's like online, gaming on it uses BSV transactions in the back. You need to buy a little bit of BSV. Mm-hmm. Do we care that the price doesn't go up? No, we don't care, because if a lot of the people building on it would rather it not go up that much, because it would affect the economics of your project. But because of the way BSV has no block size limit, it won't affect it that much. If more people use it, the fees for using it doesn't go up. So that's kind of like that's the appealing aspect as a builder, because you don't want to, being someone who's built on Bitcoin before, right? The thing that most developers miss is that once you start building a project, you don't really think about the business model so much. You just want to build this cool thing. Once you've built this cool thing, then you realize, like, when you start going for, your funding rounds, people, the question is asked, well, what if Bitcoin price goes up by 10 times? Does that mean all of a sudden I have to pay 10 times as much for using your app? And you think to yourself, well, oh, damn. Like, oh, well, no, you can trade it in exchange and manage it. Oh, am I going to do that in real time now? All right. And then pretty much it falls apart, because you can't have, if I use, I don't know, like Microsoft Word, I don't know how, if it was micropayment, like if I pay for it every day, right, it can't change in price every day. If it did, then I would stop using Microsoft Word, or I'd start using something else instead. So I don't know, that's a bad example, because it's like a monolithic app, but maybe AWS. If AWS changed their prices for for their server, EC2 servers every day, and if the price went up, it'd be like, oh my gosh, my web servers are going to cost more now. Like, it wouldn't work. I would find another cloud service. And so that's kind of like the appeal. You want a stable per transaction price. And that's kind of like why it's more appealing to build there. And we hope that eventually, if a lot of people use the applications, that the price will go up, but it'll probably be always less than BTC, but that's fine. I mean, it's kind of like addressing a separate need, a separate demand.
I see. Well, yeah, so many interesting things. I want to double click and talk so much more. We're kind of out of time right now. Been really, really thankful for you getting up at 4 a.m. to join us.
No worries. Thank you.
People want to follow you or get in touch with you, what's the best way for them to do that?
Sure. Well, I have, I guess, my Twitter account, Digitsu, DIGITSU. Let me type it in the chat. And I usually still check that. At least until the BSV Twitch, for the version of Twitter on BSV gets popular enough. Once again, doesn't have the network effect of Twitter. So even though I hate Twitter and I really don't like what Jack Dorsey's doing, I'm still going to have to use Twitter, because everybody else is. And I'm happy to use it as long as everybody else is. So you can get in touch with me there. I suppose I also have like a podcast, Bitcoin Capitalist. So I think you can find that on Apple Podcast somewhere and SoundCloud. So but if you ping me on Twitter, you'll be able to find it somewhere. I don't really have like a marketer, so I know it's really hard to find all this stuff, but
cool. Well, thank you so much, everyone, for joining us. Thank you, Jerry, for your time and all the great, amazing insights. Really excited to share this with everybody. I'll throw up on the podcast and YouTube as well, and let you know when the links are ready. And we'll definitely have to pull you on again and ask you a lot more questions. Yeah, thank you so much.
I'm happy to. Thanks very much, Arry, for setting this up. It's been a pleasure. I enjoyed reminiscing about the crypto days. So anytime, let me know. I'm happy to do another one.
Awesome. All right. Thank you, guys. Happy Friday.
Happy Friday. Yes.
Thanks for tuning in. This podcast is non-technical, fun, informative way to learn about money, Bitcoin, blockchains, crypto, and digital assets. This podcast is not financial advice, and your reactions are your total and complete responsibility, y'all. Now, thanks again, and enjoy the show.
What are you doing?
Stuck inside.